6.5 lakh crores customer assets with us. And a lot of these customers are probably borrowing money, right? And probably borrowing at rates higher than what they can get in securities.
You sound like you started pitching to clients and not liking it. Why were you doing it?
It should be free market capitalistic. A person should park his savings where he sees the highest return.
Traders deserve respect.
Yes.
So Varsity Live, it's a live interactive sessions. We've had about 2 lakh registrations there.
So at the end of the course, are people better traders?
Large-scale entrepreneurship is critical.
I mean, what India needs is a lot of MSMEs.
Open source AI movement is so critical. It's the only hedge against corporate hegemonies.
So much of flying has become automated today that the utility of the pilot in his role of yesterday is satisfied by learning on a simulator. I think that will happen in many industries.
The team that manages risk, earlier they would take a couple of hours to evaluate logs of various uploads that we do during the day. Now it has been cut down to one Python script and a couple of minutes.
Money, power, or social media fame?
Unless you have the physical skills, how can you effectively utilize money for anything positive?
Hello and welcome to the 15th anniversary edition of Zerodha's annual ritual of Ask Us Anything with the 5 CXOs. Let's get started. So I want to start with that, Nithin. We started as a broking company, but how would you describe Zerodha today, 15 years on?
We're still a broking company, so as in more a tech-first broking company, as I said. And we started diversifying over the last 2-3 years. And hopefully in the next 5 years, we'll be like a proper financial conglomerate, so with all aspects of the business. But today, because the revenues mainly come from broking, I would say we're still like a broking company.
So when would it be a diversified financial services fintech, as you said, like in terms of, in fact, maybe just explain what all you've diversified into?
We do, for insurance, we're partnered with Ditto. They are currently doing 100 to 120 crores in revenue. For NBFC, we are doing, it's our own in-house, it's called Zerodha Capital. For AMC, we are doing Zerodha Asset Management Company in association with Small Case. For everything else, we have Rain Matter, through which we invest. Of course, we also have Rain Matter Foundation, through which we back all social sector entrepreneurs. Even everything that we're investing with the Rain Matter umbrella is essentially with the idea that we'll probably find promoters where we can double down upon. So where we can hold, say, 40-50% of the business. And the strategy generally has been to associate, partner, and not try to build everything ourselves in-house. Because, you need to have entrepreneurial skills, to run a business. And each one of this, we're looking at a separate vertical.
So Rain Matter is obviously a corporate VC, as you said, but you also own these sort of adjacent companies, as you said, Ditto and Capital and AMC. But you've also been quoted as saying that it takes 10, 15, maybe 25 years to build a business. At the rate it's going to take very, very long. Don't you think that that there might be a quicker way just by acquisition? Would you ever acquire a company to become diversified?
No, in essence, when we end up acquiring a business, what happens is it's more a clash of culture. It makes sense to acquire a young business, but it doesn't make sense for us to acquire a large-scale business because the way we think are completely different in the way most companies think. And I think now, given our scale of the business, our customer base, I don't think it'll really take 15-20 years to build a business. So the bet is that between 7 to 10 years, we should be able to build a sizable business. And Ditto, for example, is a prime example, right? As in, we haven't really advertised Ditto as much, and within 3 years, they're 120 crores of revenue. As in, they're second largest online-only insurance platform in the country. The AMC also is, we hardly ever have spoken about it as much. As in, it's already at 8,000 crores of AUM. And Yeah, so I don't think it'll really take 15, 20 years for us, with our brand, etc. So I think between 7 to 10 years should be okay. So.
Okay, and it'll be primarily a broking business for the next 7 to 10 years.
I mean, hopefully slowly the contribution of broking will reduce, hopefully. But the idea is at the end of 7 to 10 years, the broking as a component of the entire business should be less than 25%, so that's a hope. So.
As CFO, Nikhil, do you agree with the strategy?
Yes.
For a change, Nikhil agrees with Nithin.
What a change. Why do you say that? Usually they disagree.
I think having seen both of them from very close, the way Nithin operates and the way Nikhil operates are very different. So it's very hard for me to put into words and explain to you how they're different. But I think the philosophical alignment of how a business has to be run, Nithin has a different way of doing it. So for example, he would want to build it on first principles from the ground up and lead it in the way that philosophically aligns with what we believe as an organization. Nikhil, on the other hand, I would assume is return oriented. He's he's very aggressive in the way he does his business. He's very ambitious. Not to mean that Nithin isn't, but then I think the views are very divergent. At least that's my sense of having seen and worked with both of them closely.
It reminds me of his constant questioning of NBFC.
What happened? So NBFC is a subsidiary. What did you question? Should we have?
It's very early in the day.
I mean, the NBFC, the thing is, we are only doing loan against securities. And Nikhil's idea was, why don't we do other aspects of the business? Because loan against securities, the problem is there's restriction in terms of advertising for us. So we can't really openly talk about it as Zerodha,
You don't advertise anyway. Everything that you do is marketing, subtle marketing we can do.
No, but subtle marketing to your own customers you can't do, right? So that's a big issue. And loan against securities in India is still a very new product, because the banks in India could not lend more than 20 lakh rupees against securities. So what they've done is, they've not really spoken about it as much, and other NBFCs also haven't really spoken about it, because loan against security is typically you get between 10 to 11%, you get a loan, and typically the interest of every NBFC or every bank is to give you unsecured and charge you more. So in that sense, this is still a very undersold product, and yeah. So the argument we had was whether if you should diversify outside loan against securities or do only loan against securities. And my view was, if you're kind of going outside the security bit, the issue is, one is you don't have any collateral, right? If you're doing unsecured lending.
Why do unsecured lending only? Why don't you start lending against homes and stuff?
Against homes, so the thing is, against homes, the thing is, the ones who can borrow money at the least cost wins, like your Bajaj and your HDFCs, etc. Because when you're borrowing against a house, against property, etc., it's you will go to the guy who offers the least rates, and we can't ever manage to give the same interest at which a Bajaj does or a bank does. This was more around unsecured lending, because unsecured lending, the thing is, it's a markets is pretty huge, but so is the competition, and the thing is, with unsecured lending, the point is, the people who will come to you to take loans are not essentially credit worthy. I think this is where we differ. I mean, and I typically like to do a business knowing my maximum drawdown, like just being able to sleep in the night very well. and and so yeah, so Nikhil is on the other side, is not like that, you know. So.
You've been called a pessimist, in fact, a constant pessimist. Are you an optimist generally, more than him?
Ironically, I think in life I'm more pessimistic. In business, I might be the opposite.
Yeah. No, I mean, K had a very interesting thing about.
He is seamlessly pessimistic across
On
life,
everything.
business, everything.
On climate, I know. Yeah.
No, but he had a very interesting thing to say about the pessimism. Well, why don't you?
The other day we were discussing this exact same thing, and I was saying there's a difference between brutal realism and pessimism. Pessimism also indicates some sort of a defeatism where you're so pessimistic that you're paralyzed, you're unable to do anything. But you can be realistic, and if the reality is pessimistic, you have to accept it. But what you do despite that is what matters. So we may have a pessimistic looking view because that reflects reality, but every day we wake up and do good things. Every day we make improvements in everything. Every day we chart out new ambitions, new pathways in whatever incremental ways. Maybe high functioning pessimism, but I think there's a constant confusion being between realism and pessimism. So we are all realistic, but not pessimistic to the point that we are paralyzed from doing anything. Like every day we are planning for the next 10 years.
I want to get the business discussion out of the way. We are releasing this with the financial results. So maybe shed some light on how the business has done over the last year.
No, business is done okay.
Just okay?
Yeah, but the thing was, the regulations kicked in October of last year. So one was around the transaction charges rebate, on which we lost between 700 to 800 crores annually. So maybe from October till March, we probably lost between 300 to 350 crores. And secondly, in terms of option trading volumes, because the 4 weekly options became 2 weekly options, and the drop in volumes was significant. So those things have hit the business very hard, and not just us, I think the entire industry. Most of our competition has ended up, charging for equity delivery trades to make up for this loss. We're still saying, we don't want to charge for that. The other interesting thing what's happened is this whole MTF business, this margin funding. So people put in some money and then the rest of the money they borrow from us. That is growing significantly. And we went live, I think somewhere around December last year, and that book is between 4,500 crores right now. So so first the business did very well the first 5-6 months. Then business did not very well in the next 5-6 months. Now the business is has seen the bottom and is kind of rebounding from there. In terms of numbers, I mean, we'll put on details saying how much, etc. But everything it's kind of been a flat year, for us.
Do you have any views on the financial results? If you were the analyst, if you weren't related to him, how would you judge the performance?
This year is largely a hit by virtue of what happened with regulation, because the markets inherently have not done badly. We've not seen a bear phase. And I think how much our numbers have gone down by, the minor 10-20% blip, will be common across the board, not just for stock brokers, but for how much income a stock exchange makes, every other participant in the ecosystem. So I don't think anything we did is directly resulting in this. I think it's across the industry. And when I look at it long term, I'll add the answer to the NBFC question in here as well. India is a largely, like we used to say, India is unbanked some time ago. India is a country which largely does not have access to credit. Long term, to facilitate the growth of infra, retail, all kinds of businesses in India, people have to stick their neck out and start lending to people, and a lot of it will have to be unsecured because people who borrow for the first time do not have an asset they can put on the line. Like that, in the broking world, penetration today might be 2-3% in India, but I believe longer term it will go up. I'm not saying it'll go up to 50% or 60%. I'm saying the 2-3% will become 4%, will become 6%, will become 8%. Zerodha today seems favorably positioned relative to our peers to take advantage of that. We hear a lot of news and marketing money being spent by our competitors. They're all over the news and the IPL and this, that and the other. But for not having done any advertising and having been around for 15 years, people don't often realize this. We don't just precede our Indian peers by so many years, but we also precede Western peers like Robinhood by many, many years. We've been here for a long time. We've been doing what we've been doing for a long time. And trust, I think, also gets built with tenure. And today, I think we are well positioned to take advantage of the rise in retail equity participation. And long term, I think we should do well.
Yeah, and just to add on to that, in the last 6 to 8 months, our market share has improved. Like in terms of the
How do you count
percentage.
the market share? The number of users or
No, not number
or
of
profit?
users. No, number.
Number of users, meaningless metric.
Meaningless metric because everyone. We actually popularized that. So between 2000 and 2000.
Or when it suited you, you wanted the number of users.
But we didn't realize that. We didn't realize that people can game that. So essentially, platforms get you to take a trade just for the heck of it. So that their number comes up on the list. But more in terms of share, in terms of say total assets as a percentage of the total AUM in the country, we are close to 10%. That's only gone up. Yeah. So the percentage of our trades as a percentage of exchange trades in the retail category is gone up over the last 6 to 8 months or whatever. I want to correct him a little because it was not bear market in terms of market performance, but it is almost been like a bear market if you look at the participation in the markets. Total number of trading activities dropped. Total number of clients, active clients, whatever that metric that everyone chases, that's also been down. The overall number of trades in the market has come down. So in that way, it's been not like 2008, 2009, but it's been like because 30 to 40% of the business has been down. Market volumes itself is down. So yeah.
Sorry, I had a question to Nikhil. So you say that as a business, we have to get into the business of unsecured lending. But then the business of lending goes beyond just broking, right? I mean, every fintech today ends up with lending as the ultimate piece. And the kind of loans that are being lent out are not, I would assume, for real value creation. These are just consumer durable loans, which ultimately people may not have the means to pay. On the back of this information, how do you still assume or suggest that as a business we get into doing unsecured? I get that if you are adding value to the ecosystem, but why do something of this?
Are you referring to the MSME kind of loans?
All kinds of loans. I'm saying we can't be myopic in our view of this is good and that is bad, because I don't think the world works like that in any way. Access to credit has to go up everywhere, across the board. Consumer durables may be a place which is part of capex of many industries. It might not be an individual buying a particular thing. There will be many options for us to do that. The only thing I'm saying is we don't need to stick to yesterday so closely that our tomorrow is biased disproportionately by yesterday.
But how is having a view on good versus bad myopic?
No, because not lending is not good or lending is not bad. I think access to credit net is something the country requires in all forms.
Which is the point I was making earlier about we started as a trading company catering to traders. We've shifted a little bit to investors, at least the perception has, especially in terms of what you're doing, Karthik. And Nikhil, your point is that maybe we can broaden that even further and be financial services to a broader set of people which are not traders, right? Is that what you're saying? I mean, as an analyst, I would kind of agree with him. So the question is, why are you resisting?
No. Resisting. No, the thing is, broader financial services, I get it. But lending is not, I don't think it's really in our DNA to lend to people, to borrow something that they don't really need.
But that's the thing, maybe it's not what they don't need. So if they were borrowing to just trade in the market, totally agree. But if they're borrowing to prepone consumption, which they're feeling optimistic that they can pay the EMI in the future, what's wrong with that? I mean, isn't that
like
what
the iPhone 17?
It may not be
right now.
Yeah, no, but I actually remember sort of.
But that's where we are at as a country today. The reason why GST has dropped, the government is trying to drive consumption as much as they can.
No, but the thing is that you don't get it. The problem is with lending is with unsecured lending, you lend money and you will get, say, 30 to 40% people don't pay. Okay, so then you have to send someone to recover the money.
But that's not what the stats are. Industry stats are not 30-40%.
30-40% don't pay willingly, right? You will need to go follow up, and then they'll pay, and then the NPA is maybe between 5 to 5%, something like that. So any finance company, right? What do people say for people who are calling for recovery, right?
But I think that's a yesterday problem. I think tomorrow problem, if you don't pay, your credit score will get hit to such an extent that you can't borrow again. Hence, people will be obligated to pay.
No, but that they can do it even now.
That's always existed,
but
right?
That's going to become more the case unless that somebody is going to call and, recover money.
Yeah, I mean, the problem in India is that it's a poor country. Like, there's no way you can lend to top 3% because there you can't compete in terms of rates. Like you're essentially looking at lending beyond the top 3%, 5%. And there you can't charge like the rate because the underwriting won't work, right? You have to charge higher rates. When you charge higher rates, people are going to default. And when they're going to default, you have to call them back.
But this margin in rates, right, is not, if you're lending to a consumer durable product, somebody's putting in capex into a certain company to grow. If a AAA borrower is able to borrow at 7.5% and we are able to borrow at 9%, the difference between lending could be 11% for them and 12% for us.
No, but then you think of the guy whom we are going to lend to, right? Why will he come to us? Why will he pay even a percentage?
We need a unique proposition for that. Why did people go to new lenders and not the incumbent banks of yesteryears when they began? Why did a Bajaj Finance?
No, because they gave the loans. Or people who didn't get, banks were not servicing them, so they went. That's how the NBFC market kind of grew, right? Because the banks have stopped completely lending to consumers.
No, I mean, not to fixate upon this one particular topic for a significant portion of the time we have today. I think the way I see it, and I'm 1 out of 5, it's just one opinion, is I feel like tomorrow we could be a full service financial services company which does everything and not just broking. But I think the good part about the 5 of us also is this, that K is different, Nithin is different, Karthik is different, and like Karthik called out rightly that, I was troubling him on the NBFC on a very public call with all the employees that it has not grown enough. The fact that we have room and there is discourse and I can tell him something that I think is not right and he can tell me something that he thinks is not right is probably what actually works for us.
And also the thing is, the NBFC business, the loan against security business, is potentially a very large business. Okay, we have lent out some 400-450 crores. We have 6.5 lakh crores in customer assets with us. So, and a lot of these customers are probably borrowing money, right? And probably borrowing at rates higher than what they can get against the securities. So yeah, I mean, I think the thing we are struggling with is how do we talk about it to our customers with the regulations in place, you know? So as and when we figure that out, I mean, hopefully NBFC will be a big piece in
I think
itself.
the exchange circulars make it very clear that you can't cross-sell loan to broking customers.
And we're not the ones to operate in regulatory grey. So when
Firstly, we are in the mutual fund business, and you very publicly stated that we want to be in index funds only, because that's probably the best first product that investors should buy. But since then, you've taken a stake in a new mutual fund, which is an active business.
Oh no! I mean, the stake is a different call, you know. So it's a small stake that we hold in, I think, Capital Mind. So that's just more like an investment. No, that's got nothing to do with the asset passive management business that we plan to run in this.
But you're not
Sorry, you want to talk about the historical context?
No, I mean, I don't think so.
I saw in one of your tweets that he was one of the first people you ran the Zerodha business past.
No, I mean, it's Capital Mind and Deepak Shenoy. So I know him from 2007. And when the idea of Zerodha came about, the first person I bounced it off was him. And when we started in 2010, Deepak Shenoy was placed as an advisor on our like advisory board, whatever. And the first 2-3 years of the business, we were very active on this forum called Trader G. And on Trader G, you know, Deepak Shenoy was very popular. And so he helped out significantly when it was very important for us to build credibility. And so now
he uses your name on his website. Right. But philosophically, you don't have a thing about going passive or active, because trading by definition is very active. Do you have a house view on whether enough alpha can be generated by fund managers?
No, I mean, there is no particular house view, but I think we as a fund house, we believe that, you know, passive is the only way out.
Understood, but you as a person don't believe in just passive, right? You're active traders. In fact, I want to talk about the trading sort of history, but you believe in value add from funds management. Why did you choose to go passive only?
Can I take that answer? Traditionally, passive has worked because the world has largely seen a bull run, especially in India for the last 15-20 years. We've not had any big corrections or depressions. If you were to change the cycle around to a more bearish market or a more stagnant market, it would look like active would have worked. For us, passive kind of makes sense because we want to operate at a fee structure which is significantly lower than our competition. That's why I don't think active at this point makes sense, because to manage a fund very actively, you need to get the best people on board. And that would take a certain amount of money, and then we'd have to mark that up, and it would become too expensive. I don't know if it makes sense for anybody to allocate their funds to a fund manager who charges 2% management fee over the long term, unless they're doing something exceptional or highly levered. And I don't think the intent is to do that. And when it comes to trading, I'll say this, over the years, even for me, the upside in trading has kept coming down. I feel like the returns you're able to generate every year following the previous year I've seen a lower return. Also, I don't know if age is a thing, but there are a bunch of things which make it very hard to trade in India. If you invest, you pay 12% tax. If you trade and make an income, you pay 40% tax. As it stands today, we are almost at that point where in Zerodha, there's definitely no trading. We've completely stopped it. We do long-term investments, and we do investments from a very top-down perspective, depending on sectors that we feel bullish about, not in the next 1 or 2 years, but things that we think will do very well in the next 5 or 10 years.
Sorry, I don't know why I have more questions for Nick today.
Yeah.
With the advent of AI and this whole democratization of information, access, etc., do you think the role of active fund management will be
Redundant?
redundant, as in when compared to?
I don't think so. I feel like the price of something either goes up or goes down based on the emotion of the person who's buying or selling. As long as people who are buying and selling a particular stock are driving that decision by virtue of an emotion, I don't think a computer will be able to model for that, at least not in the near future. Because a AI can measure the action. It can account that, okay, Karthik bought, K sold, fundamentally, technically, whatever. But the underlying emotion, which is the trigger event for Karthik to go out and buy, I don't think is measurable.
And how big a factor is that when it comes to?
I think
active
that's
fund
the largest
management?
factor.
Yeah.
I think that's the largest factor in why the price of something goes up or the price of something goes down.
And basically, I want to come back to that question, why passive? So we have a history, like, me and Nikhil, we used to manage people's money, right, before Zerodha. And that's a job that I totally hated.
Not the Zerodha, pre-Zerodha.
Pre-Zerodha, so being answerable to people's money. And I think that it's kind of a technical debt of sorts, which is there in the back of the mind. So even now, the issue with the active fund management is people can call up and say, you underperformed, right? And I don't know if I want to be in a place where I have to answer someone's call, right? Now, if he picks up a passive, it's his job, right? He outperforms and performs based on how the index behaves. But with an active fund manager, you basically are putting yourself out there, in terms of being liable for any underperformance or outperformance. And even in terms of risk of running an active fund management, it's significant because you get into all these front-running issues and things like that, which isn't there in the passive fund management space, So I mean, and basically, we got into a level in life where we think about risk more than reward whenever we are trying to do anything, So
That's him. That's not you. I know that's not you. No, but okay, so you sound like, I remember my first job, I was selling binding and laminating machines, sales. And I used to hate it, but now I realize that was the best thing ever for me to get rejections 99% of the time, because who needs binding and laminating machines? So you sound like you started not selling, but sort of pitching to clients and not liking it. Why were you doing it then? Because
back in the day.
Yeah.
Because that was the way we could earn money. So that was really.
So
I think that was the time when philosophies were.
there were no philosophy. No
philosophies.
philosophy. I do want to get into that. Like, why? I mean, before you pitched to clients, you started trading yourself. You developed a skill. I'm assuming then only you went and pitched to clients, right?
Yeah, I mean.
How did you get into trading? How does it? You keep calling yourself middle class, which is what everyone in India does. But back then, take us back 15 years. Not 15 years. What? 25 years?
Yeah.
You say?
For me, 21 years trading.
21 years.
Yeah. I'm 25. I mean, I dropped out of my engineering first year, and I got into trading the markets.
You first dropped out, then got into trading, not the other way
No, I
around.
mean, it is basically the same thing, So I dropped out around the same time I was getting into trading. And engineering, you have 5 years of subjects or 4 years of subjects, and the first year is a common where you get physics, chemistry, maths, and etc. and third semester onwards, you get into all this intense subjects. And third semester, I still remember signals and systems, which was a subject.
SLS. I remember that.
And the first class I entered, I was like, dude, this is not happening, So, and that's when I dropped out. In terms of middle class, I don't know what is middle class. If a bank manager, father and mother who taught Veena is not a middle class, I don't know what else is middle class in us.
But your parents let you drop out because no other. I mean, I don't know of any parent who would let their.
I don't think they had a choice, or they had a say.
Did they even know that you had dropped out?
Yeah.
Parents didn't know.
I was going to say.
Parents didn't know. Parents didn't know for at least, I think, in my 8th semester, I was on the last batch of Bangalore University. So every semester you could carry, supplies or whatever.
Blessing.
Yeah. In my 8th semester, I had 48 subjects to clear. And I was because I still remember my mom used to know one of the teachers, and because my mom knew the teacher, I used to go write the exam. And one of the exams, I wrote the entire DDLJ movies. but jokes apart, the thing which is good with our parents is they've essentially supported in everything that we've done. So when my father got to know that I trade, etc., he gave 5,000 rupees. He set up my account and etc. And he was quite special in the way he treated us. And my mother's side was more, studies and etc. But she also came around it very soon.
So what sort of returns did you sort of start making? What is a good return for a trader?
I don't know. I mean, see, the thing is, the real journey started in 2013-14, when because until 2013-14, I mean, I basically made some money, blew up, and then I joined a call center and worked in a call center till I met this a person called Prakash who had come back from the US, and I pitched him what I do, and I showed my ICICI Direct account, and he said, why don't you do this for me? And he cut me a check for 10 lakh rupees. So that was really my biggest tipping point in journey.
But in that bank account, how much return had you made for him to say, here's 10 lakhs?
No, it was more than, I think it was more than 10% a month.
10% a month?
Yeah. Because this was basic speculation, right? And this was on a small amount of money. Like what Nikhil was saying was, the opportunity to make money reduces as and when you add more capital, right? So, in 2005, when this person gave me the money, I quit my job, and I took a office space, and I took a franchisee of Reliance money, and that's how it started, full-time kinds, in the market. And Nikhil came and joined, I think 2006, sometime there, because he was trading in Sher Khan, and
10% a month. How much did you make? Because he calls you the better trader. So. The reason I'm asking is because there are people out there who are your customers, right? These are all traders, and I want to get that into.
I have something to say about that.
Sure.
Personally, this will sound a bit defeatist. I could trade a lot when I was younger, but with every year, as you get older, you get slower, your returns start to deplete, you start thinking about taxation. At this point, I'm significantly more an investor than I'm a trader, not because I don't want to do it, but I'm not as competent anymore. In society, recently, we've had so many people demonize traders or trading, and everybody seems to be going after them, from the regulator to society and all of that. People forget that the stock market, at the very core, is a place for companies to come and borrow money. I foresee a future where it will not just be large companies, but it will be much smaller companies. And traders play a very valuable role in making that ecosystem a lot more robust. It's one thing to say X percentage of traders lose money, this happened, that happened, leverage is bad, derivatives is bad. But none of these people who are saying that have an answer to the question. You take out all the traders from the ecosystem, you remove derivatives altogether. How illiquid does our market become? How hard does it become to find the price of anything? The answer to the problems of today are not to behave like a nanny state and tell people you can do this, do that, do this, do that. I think the answer is to make it more favorable to a trader to make money. We have taxes like STT, transaction charge. We have one tax that us Indian tax residents pay on trading. We have another tax that foreign companies coming in pay. If you're a really large fund from New York which is coming in through a country with a tax treaty, why should you pay no tax or 1/10 the tax that an Indian trader in, I don't know, Nagpur or Pune is sitting and trading derivatives? We are not valuing somebody who provides such a big utility to the country almost. How robust your stock market is, it plays a really big part in how much money companies in your country can borrow. So I think that point has come where we need to stop doing this. Everybody says the same thing again and again, right? Trading is bad, traders are bad. It's a very hard job to do. People don't understand the emotional turmoil that sits behind every trader when you're telling him, okay, I will block this contract, I will allow you to do this, I will allow you to do that, while I collect tax from you and make it harder for you to be profitable. I think it has to move, the conversation has to move from let's allow him or not allow somebody who is providing our country such a big service to how do we ensure more of them are profitable.
I was getting to that, so I'm certainly not demonizing traders. I was just curious.
No, I'm not saying you are,
Yeah.
I'm saying society is.
Is it? I mean, is it?
I think so.
Actually,
I don't know. I don't know. I don't know that we are.
experiences of late, whenever I meet students in colleges, right, they're all very enthusiastic about trading. That was natural from beginning. But these days, the narrative is my parents want to set up trading accounts for me. They want us to explore. Please suggest a way to go about, right? So this narrative was not there few years ago, but that is changing. So maybe society is also okay.
Yeah, I think the society has significantly changed
I think
from when
traders
we
are,
were. But traders, because
are
of the
not
government
getting the
action.
respect that they deserve. I keep getting tagged on Twitter saying you guys are not speaking up against this
No,
action.
that's
That I saw. But no,
Are you
but
on our side or are you on someone else's
I
side?
think Nikhil's point of view originates from the way regulations have been crafted. And while I'm on the regulatory side, and I still don't fully abide by the way in which they were implemented, we can't write down the fact that as a market regulator, you have an undying responsibility to ensure that the interest of the investor is protected.
But can I ask you this question, Venu?
Yeah.
9 out of 10 startups fail. Or maybe 95 out of 100 startups fail.
Right.
So tomorrow, would you like a regulation saying you can't have a startup
No,
because the odds of losing money are
As
95%?
I said, at the cost of sounding that I don't agree with SEBI, which I don't, we'll say market regulator, I think the regulations could have been implemented better. I will not deny the fact that there needs to be some form of suitability. And if you are someone who understands the intricacies of trading derivatives, then you should be able to assume the risk. why should, as Nikhil said, why should we be a nanny state and say that you can't lose money trading derivatives?
Because then you can keep extrapolating that. You can't start a company anymore because the odds of losing are 95%.
Right. Okay. So traders deserve respect.
Yes.
I think all market
and-
participants.
and what
We of
would it-
all people are
Yeah.
the community of them, you know.
Yeah,
so
of
I think
course.
if we don't speak up for them, who will?
And partly, I think the narrative might have changed because of both of you, in fact. The fact that you are traders and encouraging trading. But the point I was making earlier was actually something different. It was more just in terms of the youth coming into the market and wanting to be traders. And yet you put something out that's saying, what, 90% of traders lose money, right? Or something like that. It was more...
But they lose money. Why is the next logical question? They lose money because of indifferent taxation towards income. If by chance they make money, like foreign participant pay lesser, Indian participant pays more. Then we have all these government imposed taxes like STT, transaction tax. Think of it this way. If you're buying a contract of Nifty, which is the most traded contract. So if you're buying Nifty at 25,000, if you were to add SEBI tax, transaction charge, STT, let's assume you need, if you buy at 25,000,
You need 25,006.
if you were to do that 10 times a day, you need to catch 20 points of Nifty just to be break even long before you're profitable. These fees are significantly higher than the brokerage we charge, significantly higher than the cost of a trader setting up his screen and internet and all these other things. I think we need to rationalize all of this and make the odds of these guys making money
No, but
higher.
the thing is that 90% of the people losing money, it's same across markets. It's not got anything to do with taxes, right? It's, you pick up CFD markets, there's no taxes, nothing at all.
But in other markets as well?
Yeah.
In other global markets?
Other global markets.
Yeah?
But there's another theory to it, Nick. I don't know if you agree with it. So they say, I don't know if it can be covered in this, but they say the government is coming down on derivative trading because a lot of money that we Indians are losing is going offshore.
Yeah, that's because of it's unreasonable. Another thing I think should happen definitely is there should be a level playing field. There should be no such thing as co-location. There should be no HFTs which are allowed to pump orders at microseconds faster than retail. But there are other ways to do this. You should be like every HFT order which is coming in is alternated with a retail order, for example. You remove the edges that other people have and build a level playing field.
That's there. I mean, if you need to build a level playing field.
But that's the way to look at this. How do we increase the odds of our
No, but the
retail
thing is,
people
at the end of
making
the
money?
day, I don't think a 10% is a bad number
10% off?
of traders being in the money.
Can I also distinguish between retail traders and professional traders? What you're talking about is very...
No, I'm talking about foreign traders. A lot of the foreign capital, you saw the news on Jane Street and people like that. I feel like they should not have, why should there be something called co-location where they can fire an order and match orders faster than a retail can?
No, but the thing is that, 95% of the startups fail. Like 90% of traders will lose money in the markets. That's a given. But the thing is, but that should be an experience that you have by trading the markets.
It's good for the soul. Trading is good for the soul.
No, I mean, it's not good for the soul.
Say again?
Hopefully, with lesser capital, you
Right. So, okay, that's at the point. So unlike other things where you can study and pass an exam, you become a good trader by trading. You have to. Do you agree?
Yeah, see that
Yeah?
study and passing an exam has also become irrelevant. I feel like the world of tomorrow will not have jobs like our world had, or I don't know, we're all different age groups, let me not rationalize like that. But I think gone are the days where you go to college, do engineering, do an MBA, get a job, get hired by a large company. Tomorrow's world will be a lot more individualistic, in my opinion, where there will be tiny companies with 4 people, 5 people, but there would be millions of them. Trading companies in that sphere, I see a fit for it.
I'll come back to the education bit, but just finishing off the trading sort of thing. My point actually was more, and I want to bring you in, Karthik. Actually, before I do that, do you trade?
I've never traded.
Why not?
Just not me.
You're surrounded by traders. Do you trade?
You should ask K if he knows what Nifty is at.
We don't.
You don't.
20, between 20 and 30, I think. Right?
20,000, 30,000, yeah.
Yeah.
Between that. That's a broad range.
But it doesn't matter. It doesn't matter that I don't know. Yeah.
No, but the point I'm making is a different one, which is basically your customers, being the youth that is coming in and opening accounts, do they get better with practice, with education over time? Or they get to Nikhil's age and then they say, no, age is a factor. No, I'm just joking.
No, you do slow down. I mean,
But also you need
think
to
of a cricketer. Will a cricketer who plays a certain way at 20 play that same way at 40?
But there's a physical
There's
fitness
also
versus mental.
There's also a
I
mental thing
think
where
your mental thing has also got to do with the capital. If you had
The
the
amount,
same amount of capital, I don't
Then-
think you would have been
see,
felt
there's
tired.
there's no scenario where you have the same amount of capital at 40 that you had at 20. If that is the case, you should not have been doing what you're doing to begin with. Right? After 21 years, if you have the same amount of capital, is a very unlikely scenario.
But are you saying that someone can't start trading at the age of 40?
No, they can. They can.
Their mental makeup would be
But
the
I
same as-
can, how my competitiveness has gone down is palpable to me. Like, I can measure it.
But it could be just function a number of years, right? From age 20 to 40, and someone starts at 40, they could trade at whatever.
But it's also a factor of you finding interest in doing other things, right? I mean, you find evaluating newer startups and investing in them a lot more
In
interesting.
terms of
than-
risk appetite, it may still be the same.
Risk appetite has gone down.
No, but you trade, there's a certain amount of risk. You're investing in startups where the failure rates are as high as 90-95%. So you're willing to lose that money. So
I'm
in
not
terms,
really focusing that much on that category of companies where the failure rate is so high. I think I'm more like later stage.
Just finishing that thought, what has your observation been in terms of the people who come and learn on Varsity? And you're doing live sessions now as well. Maybe just talk a little bit about what it is that you do there.
so Varsity Live is, like the name says, it's a live interactive session. So where we talk about different topics. We have different topics covered under Varsity Live. The way we've structured the program is we have 5 core topics, starting from the basics to fundamental analysis to technical analysis, things that people, especially someone new to the market, should know about. And then we keep supplementing this with special classes, what we call. This could be around taxation, could be around, the one we did recently was on algo trading. We partner with organizations or individuals who specialize in those domains, and we conduct these programs. Now, it's not like a typical webinar where it's more or less a monologue. This is highly interactive. There's a leaderboard. There are practice questions being popped up live on screen. You can drag and drop things on the screen to, it's very engaging. We've had about 2 lakh registrations there. So which is pretty crazy because when we started about a year ago, I was really not sure how this would shape up. I thought no one's going to attend, a live class on a weekend, but completely different experience. And yeah, so we are pretty excited. We are constantly thinking about what new things we can add. We are crafting courses. We are crafting. Curriculums that we think is practical and will help people.
So at the end of the course, are people better traders? Can you measure?
So we don't really do that research whether they've turned into better traders or investors. But I'll tell you what, over the years, last 10 plus years, doing education related to capital markets, there have been instances where people have accidentally discovered Varsity, developed an interest in finance, actually pursued a professional degree in finance, and even managed to get jobs in finance. So I think in terms of impact, I would say that's a far higher impact on a person's life than actually figuring if a person's been able to make 5% extra return or not, right? So
And in terms of impact, I mean, we don't. I mean, Kay can maybe say more, but we don't measure any data as such, So we don't say this person did Varsity, he's trading. Let's figure out how is he trading because of Varsity, or anything as such, So.
But why not? I mean, what's the harm in, I mean, not individually identifiable data, but what's the harm in sort of taking...
But why though? There must be a rationale to do something.
Because we can learn something into human behavior, into how markets work, how people work.
But
Why
you don't
not?
have to measure to learn human behavior. There are many different qualitative ways. Like Karthik said, we know for a fact the impact Varsity as an open courseware has had on the ecosystem. We've in fact received lakhs of individual personal feedback points.
I get handwritten notes from people.
So lakhs and lakhs of people have in fact written to us. So this is not like quantifying sentiment analysis on Twitter. It's actually people writing to us, first-hand interactions. So we don't measure in the traditional sense, but of course we analyze, we know. So everything we do is backed by data, but not in terms of micro-measuring who clicked what, who did Varsity, who went to Zerodha. That's not our philosophy. So we don't measure those things at Varsity. We don't do such measurements with customer data at all. Going back to the whole respect bit, this is one of the fundamental tenets of respect for the customer and user. We don't measure and quantify them as a unit. We don't put them into cohorts saying these people behave this way. That's not respecting people. But that's how companies operate today. All kinds of analytics.
A/B testing.
A/B testing on people. We don't do that.
Is there we can't measure it, but just your opinion, is there a trait? Do you think trading can be taught to Varsity's thing, or is it something that people are inherently good or bad at?
No, I think it can be. I feel like every country has a risk-free rate, let's say 5-6%. A citizen of our country can go and put their money in a bank, get 5-6%, and then pay 30-40% tax on it and make a net yield of 3-4%, which doesn't keep up with inflation. For the effort of participating in stock markets and taking that risk, I think that number goes up from 6%, say a premium of about 5%, they go up to 11-12%, and they pay 10% tax instead of 30-40%.
That's investing, not trading.
No, that's okay. Nikhil, our customers are now watching. So, I mean, if you tell someone that 10-12% you need to come to the markets, they're going to allow 10.
Hey, 12% net of taxes, you double your money every 6 years.
I mean, I know that's how we think, but that's not how most people.
I'm not
trade
talking just to traders, I'm talking to investors as well, right? Which is a large portion of the people watching this.
But we want that, right? We want investors to come in, and the equity risk premium in India is how much?
5%.
5%.
5-6%.
It's slightly higher than because of the higher risk. Sorry, go on.
I've never heard of the phrase equity risk premium. I'm struggling to understand what it means.
Equity risk premium is the extra return you get over the risk-free rate, which is cash. So basically, the difference between what equities
But
return
the tax
and what
makes that
cash.
much wider. But it's a no-brainer, right? Like if you were to park your money in a bank, you get net 3.5%.
No, but then
4%.
that you're assuming the guy is on a 40% slab rate.
Or even if he's in a 30%.
No, that's assuming because most of the country right now is going to be no tax
say you
slab.
get even at 10%, you get
No, zero.
even at 0 you get 6% there, you get 11-12% here. That's a significant difference over 10-20 years. There is a reason why people are not keeping money in banks anymore. And it's not a reason which has been artificially orchestrated like you hear in the news. It's because the return they're getting here is higher.
That statement, people are not keeping money in banks, what is that based on? More people entering the stock market?
Yeah.
But it's still very tiny compared to FDs, no?
No, it's making a difference. the amount of money in the banking system, not just because of stock markets, but people now go through the UPI and circumvent the banking interface. In many, many ways, you know, you have all these new companies out there which are doing more creative things. People are keeping lesser money in banks. But I don't think as a government we need to figure out a way to artificially orchestrate them keeping money in a bank if it's lower return. It should be free market capitalistic. A person should park his savings where he sees the highest return.
A counterintuitive, not recommendation, but a thought that I had many, many years ago was they should maybe remove capital controls. So allow people to invest overseas. The reason would be to diversify more, make a more diversified portfolio. And once we make balanced funds with more asset classes, so with US equities and global equities and stuff, the more diversified the portfolio, the less the volatility of the balanced fund. And therefore, more people would go from FDs to a balanced fund.
I feel like if we were capital account convertible, I think more money would come in than go out. When you look at the numbers, the amount of money, so there are two ways to take out money from the country. There is LRS, where you can do $250,000 cap. And then there is ODI, where you can do about 4 times the net worth of the company that you're taking out money from. But you're capped in terms of where you can invest that money. You can't buy public equity. You can't put that money into a fund. You can't buy real estate. It has to go into an active execution kind of business. There's a third model called FIF, which sits out of Gift City. It's called Family Investment Fund, which is broader and more open. But I think the regulator at Gift, which is IFSC and RBI, are trying to figure out a mechanism which will make it work, because Gift as it stands is another geography. It's not like it's in India. The amount of money which is going out under LRS has gone up from maybe $5-6 billion a year to $25-27 billion a year. And this can be worrying if you're the government and you're trying to manage your fiscal stance. But the amount of money that comes in back into the country in terms of remittances is $140-150 billion a year. And this is not, whenever I think of remittances, when I was researching this, the first thought was, okay, these are rich software engineers from America sending the money back. I'm saying that because of the H1B news which is all around us. But only something like 25% of remittances actually is from America. The rest of it comes from, Mallu's going to UAE and stuff like that.
Why do you point at me when you say
Mallu. In my opinion, if you were to open the country up and people can take out money and move money back in as freely as America, for example, India has the demographics, the infra opportunity, the growth rate, the fact that it's a democracy. It has a bunch of different factors which act as tailwinds. I personally think a lot more money would come in than go out. Even today when I talk to funds, we've had really dismal FDI, FPI numbers in the last year. We've barely had any money come in. When I ask them why they don't bring money in, most often what I hear is it's easy to take money into the country, it's hard to take it out, and I think we need to change that. Gift did a bunch of things. They removed the need for a PAN card if you're a foreign fund. They created a one platform where all approvals can happen. But I feel like a lot more can be done, and capital account convertibility long term I think will help the country.
A lot of these things in theory, no capital controls, all sound great in theory, on paper, unfettered, free market movement. But socio-political, societal factors also play in. It's not from a purely financial perspective, it makes sense. But developed countries versus developing countries, the dynamics, societal dynamics, even culture factors in a lot. So it's not black and white. I just wanted to say that.
True, but if we have to sort of stop something that wants to flow, then there's something else wrong, right? If people want to leave the country, they want to take the money out, the fact that people want government jobs, I mean, as much as you say this should happen, see what is actually happening?
I look at it another way. I don't think money and socio-economics kind of like have that much to do with each other. Asset managers across the world are largely apolitical and non-religious and all of that. They put their money where they can get the highest return.
I was talking about ordinary people, ordinary citizens.
No, the foreign money we're expecting to come in is not from ordinary citizens. It's from
No, I was talking about money going out. People.
Money going out. No,
Not
yeah.
incoming.
It's very hard, K, because if you were to, let's say, for some unforeseen reason, the rupee has depreciated 4-5% every year for the last whatever years, and the incentive for money going out has been there. But as the world stands today, the US, by virtue of how much debt they have, are vocally saying that they want to depreciate their own currency. I don't know if it's in order to pay back the debt or be more competitive from an international stance. In a world where our currency stops appreciating against foreigners, there are very few places where somebody can take money out and invest and get the 11-12% return that they're getting here in the country. So you just look at the financials of it, I think the incentive for money going out is not so much.
Now though, now. But given 10, 20 years, you never know. These things keep changing.
But even now, for example, the last 5 to 10 years, amount of tourism that's gone up, I mean, international tourists from India, I think if they could just take money out freely, I don't know, I'd feel scared.
But I think that would make our tourism more competitive.
I don't think so. We don't
But
have
like,
the infra.
look, historically, whenever a country has closed itself down, thinking foreign products are more competitive, foreign locations are more competitive, it has slowed down the growth of that country and not suddenly made them more competitive.
I'm not talking about protectionism, just saying there's a lot of nuance here. You pick a country like Thailand, they have a very well developed tourism industry and infra, even societally. Infra is not about building stuff for tourists, it's also about societal acceptance, how people, visitors engage with local people. So if a country doesn't have that, I don't think it'll magically, culture also plays a big role.
But I think we have that.
I don't know.
tourism?
I don't think so. I don't know.
Except for maybe Goa or except for maybe a few places.
No, I feel like with enough changes in infra, if we actually really get competitive, India has a lot, from jungles to temples to beaches.
I mean, let's improve our civic infra first before we. So the point is, these are systemic problems.
Closed.
These are systemic problems. We're looking at tourism, which is like a layer way above all our civic stuff, right? So my point is massive societal factors, and it's very nuanced. I don't think it's so simple. And the number of people leaving, the immigration graph we've seen, right? The number of bright people leaving, the brain drain has accelerated.
Regulation never helps. I think I was having this interesting conversation with somebody about income inequality. One of the biggest reasons why there is income inequality is all these regulations. Crony capitalism and monopolies thrive, even if you go back to like old school economics and read Ayn Rand or something. These discrepancies are expedited by regulation. The more regulation you have, the more discrepancies you'll have.
We're all alive here thanks to strong pharma regulations, consumer protection regulations, environmental regulations. So you can't blanket say that regulations are bad, but being a nanny state, over-regulating is bad. So there has to be a fine balance. If you left everything to free markets...
The thing is, no, I'm not saying that. I'm not saying we should not have pharma regulations in terms of the product that a consumer puts into his body. I'm saying a regulation that in pharma, let me take your example, that you can only set up a company if you're able to pass through, if you need to have a factory which is X in size, you need to have machines which are Y, if you need to have license A, B, C, D, E, F before you're able to produce a generic medicine that is a off-patent 10-year-old medicine from America, somebody who can afford the capex of putting in 100 crores, that's the only person who can make a pharmaceutical product. Regulation while setting up an industry and regulation which is affecting the customer who is consuming the product are two completely different things. You're speaking for the regulation where the tablet I'm consuming is quality control. I'm all for that. I'm talking about the regulation required to set up a pharma
You're
company.
talking about ease of doing business.
Which is regulation.
On that point, I
They
just
should do it. I mean, the government should do it. I'm not on any side, but the government should do it. I think it's something that will help the country go much further. Karthik, would you mind switching with me? My neck is paining.
Right, where were we?
The NRIs.
NRIs, right. So, Nikhil said actually you didn't say, but it's the fact that we're getting remittances of 150, 140 odd billion. But we want that money to be invested in the markets. We need capital. And if foreigners don't invest, we should at least get the Indians to invest. What are we doing about it?
No, I mean, I think the NRI opportunity is pretty huge, right? As in, the thing is, we have made it easier. We got a new NRI onboarding flow, and it's kind of easy, but it's still like if an NRI was to open an account, I salute to him.
Can I say it's a pain in the neck? Use it again. It's an absolute pain in the neck to open an account.
Yeah, so.
But a few of these proposals are also under discussion at SEBI. So, for example, one of the rules don't allow for an NRI to open an account sitting outside India, but through ISF, which is a body that constitutes brokers, MIIs, the regulator themselves. There's a proposal that SEBI is open to hearing, which is to allow seamless digital onboarding even for non-residents. I think the chairman also said that he wants to ease the flow of money coming into India, and a step in this direction is, I think, there was one regulation that was carved out which made it easier for FPIs to invest in government securities. The reporting requirements were also cut down. So I think we're on that trajectory. The regulator seems to be inclined to be heading in that direction.
See, FPIs don't have the problem because they already own a big chunk of our market. It's the individual investors that have trouble sort of investing here. Sorry, you were saying something?
No, nothing. I mean, one of the ideas that was suggested also is NRIs investing into India through GIFT, but there also the onboarding flow is completely broken. It's not online. So yeah, it's an issue right now.
Sorry, again, I don't want to be siding with the regulator. Another change in rule that came into effect was NRIs who want to do derivative trading. The requirement to obtain a CP code, a custodial participant code, is done away with. That is also something that you should look in positive light. And just so you know, we've also reduced our brokerage on derivative transactions. It used to be 100 rupees earlier. We've cut it down to 50, and on the equity side as well, we've halved our brokerage fee for NRIs.
And we offer both non-PIS and PIS. So for customers who don't intend to take back money, so they can map their non-PIS, they can map their NRE accounts and open a non-PIS accounts with us.
I must say, when I went to that PIS, non-PIS, I didn't even know what it stood for. And it's like, intend to, matlab kya? I don't know what I'm going to do. I can change my mind in a year's time. So it's a bit, just the sheer number of abbreviations for me to get my head around what to do was just annoying. But therefore, the bigger picture is India the best place to invest, even for Indians? I asked this last time as well. You're very bullish on India still?
I am bullish. Yeah.
You don't invest overseas?
I invest overseas, but it's probably 1% overseas and 99% in India, in that ratio.
Do any of you invest overseas?
No.
No?
I invest for them overseas.
I meant to actually ask that. Do you invest? You don't trade, but do you invest? He's your advisor.
He does.
Fund manager.
Do you get a discount on fees?
No fees.
Honestly, if you ask me, I have absolutely no clue what's happening. Nothing. But
You're a typical customer.
it just doesn't cross my mind.
Speaking of product, I want to sort of bring it to you, Kailash. The world of AI has changed a lot in the last year. So maybe give us an update on how you see AI developing and the impact on Zerodha.
I read about this. I read this article last week or 2 weeks ago, and I read this word for the first time, inevitabilism. So the argument was that if we all keep saying that AI taking over everything is inevitable, it will eventually become true. So this whole idea was called inevitabilism. Very interesting. But to be honest, I think it's inevitable. Software eating the world has been inevitable, and AI is software, and it creeps in everywhere. It already has been from where we were from a GPT 3.5 release 3 years ago to where we are today. The world has moved on by several light years, not just in terms of AI technology, but adoption. 95% of the adoption right now across the globe is based on frenzy and hype. If you don't adopt AI, you're missing out. There are corporate mandates coming in saying every department must adopt AI with no direction on how to, etc. At Zerodha, we've been, just like with all other decisions, be it product engineering, business, we've been exceptionally objective and careful with this. We were early adopters, but adopted it in very meaningful pockets. Tech team uses AI heavily. It's been a massive productivity boost. We're using self-hosted open source AI systems to, again, gain massive productivity boost across different departments. It's not being forced on anyone, doing it bit by bit. It's been a slow process. So as Zerodha, we are benefiting heavily. Now, there are other questions. If people start interfacing with capital markets through AI assistance, people stop coming to your app, what will happen? Because all the app companies, including us, that's the primary interface, the graphical user interface, phone, desktop, etc. But we've never relied on pushing stuff through these screens to engage users. Philosophically, strategically, we've never done that. But everybody else relies heavily to push their whatever lending products and whatnot. Doesn't push notifications every day, ads every day, cross-selling of products on their screens. We've never done that. So if people stop using these UIs over a period of time, let's say the next 5 or 10 years, how will you push your products? Must be an existential question that many orgs out there face. We're not even thinking of that because our mental model is not about pushing stuff through screen. Our abstract mental model is that people come to Zerodha to avail high quality, trustworthy financial services and products and technology. So if tomorrow's technology moves away from screens, from apps to something else, AI assistants, we are completely okay with that because our moat is the quality of services and product behind the scenes and the trust people have. So the next decade is going to be very interesting, but this is just a very narrow view of Zerodha, customers, what we're doing internally, etc. But AI as a whole, the kind of disruption it might cause to, let's say, jobs, white-collar jobs, is also significant. So how that affects economies at large or capital markets at large remains to be seen. There's a lot of fear-mongering. There's one camp that says that AI is going to cause massive job losses. Another camp that says that AI is such a new radical technology, it will generate a lot more new jobs. But if you look at the last 3 years, the generation of a massive number of new AI adjacent jobs has not really panned out. Anecdotally, I know of many tech companies, large ones in the Indian ecosystem, who've outright stopped hiring junior engineers. The logic is that if one senior engineer can do work worth 5 junior engineers by commanding AI, why do you need to hire? That's a very narrow, myopic, short-term way of looking at things. So the macro effects, I think it's going to be disruptive for sure. How that affects the industry and Zerodha, don't really know. But in the context of Zerodha, customers, how we think of business, we are okay to ride whatever wave comes.
Nikhil, you had a sort of an exchange with Perplexity on
I'm not
AI.
going to answer all the questions. You take it to somebody else.
No, but this is one, you openly said you want to do an internship, and I think, was it their CEO that said investing in AI? So we're definitely interested in your view.
On AI?
Yeah. Investing in AI.
Investing in AI.
Or rather AI in investing.
Investing in AI, I have a more formed view on. I feel like if you were to take 100 rupees and invest a rupee in 100 of the AI companies today, I don't think you'll make money in the next decade. It's a very binary view. I feel a lot of them are very expensive.
So it's a valuation issue rather than an underlying story issue.
Yeah.
There's more to it. Just a technical perspective. Most AI startups today, maybe even 98, 97%, are doing commodity stuff. The thing about AI, again, there's evidence. If you just pick the last 3 years, everything around AI has become commoditized to death. It's the large model makers and the large infra companies who sell these model services who have moats. Everybody else, you build a user experience wrapping AI. 2 days later, there's an open source, competing open source project that comes up. So tons of these AI-enabled services and startups have just been commoditized in no time. And the other crazy thing is, you build something on top of AI, but 6 months later, the AI itself can do it now. It has that capability. You don't even have to rely on that. So most AI startups are bunk in terms of having a moat.
But net, do you have a positive or a negative view for the future?
I have AI is an absolutely fascinating technology. I have old academic background in it, so I've always paid attention, and I really like the breakthroughs that are happening. That is AI as a technology. LLMs are fascinating technology. That's one side, that's the technical side. But the societal side of technology can be beautiful, standalone. But someone once told me, technology is neither good, nor bad, nor neutral. So that's the thing about technology. And AI is so pervasive, the way in which it can be used, how it affects society as a whole, that I'm really wary of. Because the most immediate use cases that you see is, I don't know, propaganda generation, maximizing ad revenues and whatnot, right? At scale. So all the malicious actors who are doing stuff can now do all of those things with AI at scale. So
Do you think there is merit in the school of thought that believes that there is going to be a new world order where we cut down from 7 days to 5 days, it'll go to 4 days of working?
nonsense.
You don't?
If internet was supposed to be that, digital technology was supposed to be that. That was 20 years ago. Imagine 25 years ago. In the last 25 years, how much have we digitized, right? Everything is now digital. Government services are digital. Absolutely everything is digital. Have the number of working days gone down? The current debate is
In
whether
some
it should
places
be
they have.
very few places.
We do 5 days of work, 5 days a week.
The current debate,
I mean,
No,
Most
but
people do 5
last 20, 25 years, it's been 5 days of work.
In Europe and some places it's gone to 4 days. Stuff.
yeah, that's like a tiny fraction of the world. The big debate in India is, should we do 90 hours or 120 hours a week? So that's the baseline.
Okay, let me rephrase that question. Let's assume AI will make everything more efficient. Productivity will go up. The marginal utility of anything goes down when productivity goes up. Say, for example, today you have one computer. Tomorrow, at the same price, you could buy 2, 3, 4, 5, whatever. Beyond 2 or 3, you'll stop buying computers. When the world has an excess because of productivity having gotten more efficient, what do people do at work? What do they go to the office and do?
Firstly, the assumptions that AI will make everything efficient, I don't think it's a given. It can make lots of things
I'm not saying
efficient.
it'll make everything efficient. I'm saying net productivity will go up.
See, even the definition of productivity, let's say in the corporate sense, is very questionable. Millions of people go into offices, do stuff, come back in the evening. So are those things really productive for society? Are those things just instances of inefficiency requiring people to do, etc.?
What if I
is
give
to
you
be
a very
seen.
narrow definition of productivity? Say the amount of effort required to make a car. Okay? Today you need X number of people, Y number of factories, Z number of hours spent into building a car. tomorrow, because of AI, all of that reduces to 1/10 of what is required today. We will stop having so many people in the business of making cars because you'll need a lot fewer people making more cars than they're making today.
Who will buy these cars? Because
Exactly. That's the point I'm making.
Yeah.
So what happens to the people and what happens to the cars?
This is why I said I'm not so certain of a positive future with AI-led automation. Automation was supposed to do a lot of things. It's gone some way. But AI-led automation is a whole different beast. You can now automate 10 things or 100 things in one shot. What that will cost to society, loss of jobs, etc., loss of opportunity. But AI is it's a multi-dimensional technology. It should be looked at from the perspective of civilization and AI, not companies. But the fact that it's the top 10 companies who control AI also, it makes you question. So how could it possibly be a net positive in general for society, for civilization itself?
If there's no regulation, maybe the top 10 don't control it, right? If they're not able to lobby into a regulatory moat around AI, they won't
No,
control
but it seems like more and more the lobbying power is increasing and their ability to influence the governments are increasing significantly, right?
And the amount of capital required, the amount of resources required to make, run, control AI today sits with only the large corporations. So it exists. AI is a technology, AI is artifacts, but you can't just go compete with a big corp because it requires enormous resources.
Will that not go down? What is that, Moore's law?
It will go down. It has been continuously going down, but I don't think it will go down to the point where we'll be able to just build something that competes. I mean, this is why the whole open source AI movement is so critical. It's the only hedge against corporate hegemonies. So when it comes to AI, my view is it's not really government, regulation, companies, product, services, SaaS, etc. I think these are narrow views. AI should be looked at a global, more civilizational perspective, and these are all factors in it.
But then corporations aside, governments also would not want to curb the rate at which AI growth is happening, right? Because it is so integral to the sovereign security. I mean, isn't that the case? I mean, they have to empower corporations, right?
So if you again pick the last 24 months, regulation versus no regulations, it's again not black and white. EU created they drafted the first set of really stringent regulations. This was 2.5 or 2 years ago. And the world thought, okay, this is the way forward. But then they deregulated significantly over the next few months. So even this, should we let it grow? Should we not let it grow? If we don't let it grow, some other nation state will let it grow. It's kind of, like it's an arms race at this point.
Bringing it back to Zerodha, because I have a whole bunch of questions that people have sent in. Specifically on AI and Zerodha, you're saying only the developers are using it. And you don't see...
That's not what I said. Developers have been using it from day one, but everywhere else, various departments, business departments, everybody's using it in meaningful ways that they find impactful in their context. We haven't mandated saying everybody must use AI in this way. So we've been very cautious, very objective, and everybody is using it to improve their own productivity in their own ways, very organically, in a decentralized manner.
Internally, we run this initiative called Project Biceps, which was spearheaded by the tech team, and teams across the organization are free to adapt, learn, and then use it for their own specific requirements. So for example, folks on the RMS team, the team that manages risk, earlier they would take a couple of hours to evaluate logs of the various uploads that we do during the day. Now it has been cut down to one Python script and a couple of minutes during which these checks get done. So I mean, I can give you numerous examples of how each of these departments have used this information to better their own processes.
And is there a risk angle to using AI in any of these?
No, I think it's de-risking, right? Because another example that I can give you is as part of the compliance, we're required to upload various reports to the regulator, to the stock exchanges. So how do the exchanges then look at this information and they generate various different forms of alerts? Now, how do you ensure that the information that you've uploaded to the exchanges is correct? Earlier, you would have someone look at these files manually. Although these are all system generated, you would have someone evaluate opening the files, looking at whether the values uploaded are pertinent. So today it's all scripts. We've written different scripts for different scenarios. So it gets evaluated across, and then there's a 100% check done for all of these reports that get uploaded. So I think it's de-risking.
That said, we are formulating a risk policy. There are other aspects of risk. What if you become too dependent on AI and Zerodha becomes too dependent internally and suddenly AI stops, because these are all again run by large corporations? What happens? So there's that existential philosophical risk there. What if you end up generating vibe coding systems with AI, which becomes an integral part of the business? So we're very careful of all of these, and we are studying how we ourselves are using it, and we are actively trying to build a risk framework which we will adopt as a policy and adhere to.
You mentioned vibe coding. You had a post about vibe coding. I think it was Bhuvan had become a coder or something. So changing gears from AI to people, is that your moat, do you think, in terms of your culture, the people that you've sort of hired over the last 15 years?
I mean, people is definitely one of the modes, but I think the bigger moat is the philosophy with which we work as a business, as in just the fact that we're not looking at quarter to quarter revenues and kind of are looking at more 5 years, 10 years kind of view, and then take decisions based on that, based on the view of the 5, 10 years. That's a bigger moat. But people, definitely, people makes a business, and the core, I think the whole Zerodha, the core number of people that are required to run the business is maybe 50, 70 people. I mean, that's a range in which everyone is part of that, So.
That was one of the questions put in, is that how do you hire and retain people, because your attrition rate is very low. And I must say I haven't worked at that many companies, but I do travel, and I haven't seen as many people love their bosses as I've seen people love here. I'm curious, what is the secret to that?
No, I think no one's been hired to lead or something like that from outside. Everyone's come and grown from within. I think, and all the people, at least when I hired, or I know I could say to them also, say about them also, or K also. I mean, we don't sell like a wrong expectation just to hire a person. We don't say you'll make so much money, or you'll make ESOPs, or you'll make whatever. As in, we're just very realistic in terms of, the opportunity at work and what we are solving for, and etc. And yeah, people generally have been sticking around for a long time. As in, recently.
You give some coins for 10-year services and stuff as well, right? You have a bunch of people.
That's just a fun thing that he does. The coin has his face on both sides.
Just in case they forget who the...
Both sides, heads and heads.
Yeah? I have not seen it. I've seen pictures of it, right, in this room, but...
No, I mean, the coin was made, it was for, for 10 years of Zerodha, and it was made, I think, during COVID, because it was 10 years of Zerodha, and it was to say that thanks for 10 years, and thanks for when you joined, when, I mean, we were nobody, so that was the context of the 10 years coin. But generally, I think the core team, which is 100, the attrition there would be, I don't know, almost zero. I think maybe historically 3 or 4 people have quit from the core team, core bunch of people. And also the thing is, as a team size, we've been essentially the same size from 2016. We are around 1,100 people in 2016. We are at around 1,100 people now in 2025. And all. So that essentially means that we don't have to fire people and etc. With this AI and all coming in. So,
How many people report to you?
close to 30.
Also, I think we are a very flat organization and people are easily accessible. Plus, we also have forums where people can share their opinions on any aspect of the business freely. Right? So, all those things make a difference, I feel.
Also, just to add to that, you use the word retain. We don't use that word retain. We don't look at people as units who come and go. So we don't, even the word attrition only ever comes up when somebody asks us, like internally in the last decade plus, right? I don't think we ever had a discussion about attrition. That word doesn't even come up. So when you don't look at people as units of work who come and go, where a team has to have a certain size, etc., then you create an environment where people are more okay than not okay. So if you have interesting work, it's challenging, your peer group is nice, and you're growing financially. Also, there's no career ladder at Zerodha. In the core team that Nithin's talking about, you can't grow, there's no titles. You start out as a certain person and your responsibilities grow and the depth of your work grows. So it's about their environment. So we don't think of, if somebody wants to leave, it's completely okay. In fact, we openly talk about it. If somebody wants to leave and for any reasons, priorities in life change, it's okay. But when they leave, the stuff that they've built, the work they've done, the relationships they've built, it should be amicable. So that's the philosophy.
If they don't have a title when they go somewhere else, what do they say that they did
No,
at Zerodha?
they have one title for external usage, but internally we look at people and seniority in terms of the responsibility they shoulder. So there's no level 1, level 2, it doesn't exist.
Speaking of retain and units and so on, you've kind of famously don't like consultants. Is that why you don't like consultants?
I don't like
I actually have been
consultants.
asked. I have a friend who works in one of those big 4, and they're like, we want to pitch to Zerodha. Surely they need strategy advice. And I was like, do they? But so I'm curious. No, but it's a question. I mean, your team is relatively young, and the company size that you are. I'm curious as to whether if you were to get picking a name, McKinsey or McKinsey equivalent, what do you think they would do differently in terms of strategy as opposed to what you pick up
The
organically?
question is why?
That leads to the question of why are you in business?
We exist, we thrive, we're growing, so why should we require consultants? Also, our moat is the way we work, the way we strategize, the way we build products, services, etc. If they're working well and there's evidence that they're working better, continuously improving, things are growing, why would you?
I think this consultants, it's more, like a second gen thing to do, so like I don't really understand what value they add, to be very honest. As in terms of taxation and all, we probably will use them because, because we don't know probably something about taxation, so we end up using someone. But in terms of strategy, definitely not.
Because if you have to bring somebody else and pay them to tell you what to do, what are you doing here? We shouldn't be sitting here doing business.
Say that to all the other people who do hire consultants. Speaking of strategy, I mean, you have an interesting media strategy. You've built a lot in-house. Maybe just explain what your media strategy is first, and then we can go into...
I mean, see, we didn't have a media strategy 2 years back, and then we were in a rush to have a media strategy. I mean, until 2022, the only media strategy was Varsity, right? The Varsity is not traditionally one of those traditional media kind of a play. we used to put a lot of content out in mostly in the form of text, and we kind of missed out on the bus, like when people started consuming content in the video form. So I think we rushed into the media strategy.
So there was no strategy.
There was no strategy, to be very honest. So essentially, the thing is, in Zerodha, whatever Karthik was doing in Varsity and education, he also did it in video form. That was part of core strategy. In terms of Bhuvan and co running something called Zerodha Markets, that was very core strategy. In terms of the team Learn App, they're putting out content more suited, more in a fun way of talking about not something directly to the markets, but more that can appeal to the masses. That was part of a core strategy. And then we also started the Zerodha network, where we started partnering, associating, etc., with a bunch of influencers. So that was not really core strategy. I mean, that was us experimenting and trying to figure out how it works. So that's basically the strategy.
Like he said, there is no strategy. But if it helps, one day we'll look back and we'll call it strategy.
Hindsight is the best strategy.
What is WTF today? I mean, it seems to be going. Firstly, you have multiple series, and then you have a bunch of other things as well.
We're
So maybe
trying to build
explain.
a media house. I think the time is ripe for a more authentic voice that the youth of our country can resonate with far less bias than the incumbent behemoths of yesterday. And we are trying to be that.
But why have a media house to start with? What is a stockbroker doing with the media?
I don't think you can tie them in that way. A media house, because I think Indian youth, especially the English-speaking affluent Indian youth, or not affluent, but people who want to go out and build, people who want to be entrepreneurs, I'm talking about that category, they need a voice which speaks like them and to them, which is a bit more evolved and authentic than the voices they have access to today. And we're trying to do that. There's no other objective of it. The end outcome is to encourage more entrepreneurship in the country. And I think to a certain extent, we've been able to achieve that. If you ask me in one line, how can I define it? End state, if you watched every video that WTF puts out, should be better than an MBA from an Indian college or a foreign college. If we are able to achieve that, I think we would have done well.
You were very specific in the questions that what can a 25-year-old build in the first series. And the latest one I noticed, you were very specific. What should a 25-year-old upwardly mobile kid do? I think something like that. The last one, WTF Finance, I think you said something about employment, right? Is that kind of, no?
No, it's
Okay.
both employment and entrepreneurship, but we would like for as many people to become entrepreneurs as possible. I think that's the way forward for India. In my personal opinion, colleges are dead. If you're 25 and going to an MBA college today, you must be some kind of idiot, if you ask me. And I think 5 years from now, this trend will be exaggerated, expedited, and a lot more people will not be opting into entrepreneurship, but they will have to choose it.
Because there wouldn't be any jobs.
There would be lesser jobs in the traditional sense.
Can we cut that? We go to a lot of colleges, BA colleges.
I was,
But it's true, no? Like,
It's-
would you
Yeah. Sorry?
would you like send
But
me
for a lot of people, I'm not talking about the affluent Indian youth, but for a lot of tier 2, tier 3 city youth, MBA is like a stepping stone into the larger world.
Now companies are not hiring by virtue of.
It's not about the company, it's about how the individual feels. Wouldn't wouldn't that ticket give him more confidence, him or her more confidence? And
I feel like everything you're taught in an MBA college is available for free on YouTube and a bunch
Totally
of books
agree.
that you can read.
Totally agree. But would that give this persona the confidence?
It might
To deal with the real
alleviate the
world?
insecurity of the person, but in a pragmatic way, does it have utility? No. If you want to alleviate insecurities, I think there are better ways to do it than spend 2 years and a lot of money to an MBA college.
That has always been the case, right? Today it's available in video form. Earlier also you had books you could read and
No, I think today with AI and everything, it's a lot simpler. Like I can go to ChatGPT and deep research a case study or build a case study in a way that an MBA college could have taught me. And the syllabus is not as dynamic as the world, the open sourced world is. So I don't really see the utility.
I'll give you
in
an
it.
example. So today, whatever's there in Varsity covers pretty much everything you need to know from a CFA curriculum perspective. But still, people go ahead and give CFA because that gives them validation.
I am not agreeing with that, Karthik.
I mean,
You're right. It's a stepping stone. CFA
Exactly.
requires much more study than what you have on Varsity.
I mean,
This way, if companies that we were speaking about, the scary ones, the Meta and Apple and all of that, when they start saying things like in your job application, do not mention qualification because it does not matter, I think it's but a matter of time before that trickles down.
yeah, but even today, when large companies put out their job requirements, entry-level job requirements, you look at that, and one of the things that they mention is MBA. So
I think that's changing. That trend is
TCS,
changing.
MP, you know.
do you think it's going to percolate into India this soon?
It might not be this soon, but if you're making a decision whether you want to go to MBA college, you're coming out many years later.
And an MBA for most people would be like a significant investment, right? As in,
Sorry, can I share some perspectives? This is again a very narrow view. You're talking about MBA, business, job, etc. And colleges or educational institutions are not just that. Yes, most colleges and educational institutions in this country especially are set up specifically with industry incentives. And those incentives are breaking down, I agree with you. But not everybody has the ability to learn. Because if people generally had the ability to learn, everybody would be an expert at whatever they wanted to be because the information has been available on the internet forever. Good colleges have good faculty who teach people how to think and learn. That will exist forever. That level of human mentorship, that level of human bonding and validation and opening people's minds, that has immense value to society. We can easily say this, that we can go learn whatever we want on YouTube because we've crossed that barrier. But if you think about an 18, 19-year-old who's unsure, whose brain is still developing, that exists. But completely agree with
But
you
I
on the
think-
whole commercial thing
But I
around
think
it.
that teaches you to learn in a very conformist manner.
Not necessarily. Certain kind of institutions,
Because
yes.
if you're in a class with 30 people or 50 people or 100 people and one teacher is speaking a certain dialect with the entirety of the class, you're not learning in the nuanced manner that your mind or your curiosity is taking you.
That's not how it works. You can argue the same thing about your videos that you do. Millions of people are watching it, but it's one video that everybody is watching it. That's not how it works. So a teacher can speak to 50 students in the class and it opens up different pathways, a good teacher in people's minds, and then it's up to the initiative that each student takes to find their own path. But some teachers, some people have the ability to teach others how to think. So that's what I'm
No,
referring
that
to.
is great. If you're learning in college the ability to think and inculcate your curiosity and all that is great.
Most Indian
But when
colleges
I-
don't.
When I
Yeah.
think of MBA, I'm not thinking that.
Yeah, I'm
If
not
you
talking
had
about
a-
MBA. I'm not
If
talking
you
about
had an
MBAs.
imaginary child, would you send him to MBA?
MBA, no, never. No.
Dinesh is going to be deeply disturbed watching this piece. But then we're not extrapolating this to other streams of education like medicine and all, right? Like, if you had a choice between choosing,
I think that will change too, in my opinion.
so
Medicine.
you're saying if you had a choice between choosing a doctor who has an MBBS versus someone who doesn't but is a better surgeon, you would go with them?
YouTube surgeon.
Yeah.
Not YouTube. See, the thing is, when I pick a doctor who's MBBS, I am alleviating or appeasing my own insecurity by the fact that here is somebody who has been in college for 5 years and somebody has said he's okay. There will be other ways to validate why somebody is good and somebody is bad, in my opinion. Maybe doctor will happen later, but for things like MBA and much else, I think it will happen sooner.
So there's a distinction between hard sciences, physical stuff, etc. No matter how many YouTube videos you watch, somebody has to go.
I'm not saying YouTube video. I'll give you an example. Like recently, there was a lot of hue and cry about pilots not needing to go to pilot school and flying on an actual aeroplane and learning with 1,000 hours and all of that. I think Indigo and Air India and all wanted to pass a regulation that now you need to sit in front of a simulator and learn. Pilots suddenly felt ostracized is a very hard word, but they were like, we put in the time, we put in the effort, there was this curve, we made it above that and all of that. But Indigo as a company is like, so much of flying has become automated today that the utility of the pilot in his role of yesterday is satisfied by learning on a simulator. I think that will happen in many industries. I don't think the surgeon of tomorrow will be a human being with a scalpel in his hand. It will probably be a robot, and the role of the doctor behind the robot will also be different.
But he wouldn't have passed out of YouTube school. They would have undergone rigorous scientific
training. I know
training.
you have like a hate for YouTube, but I'm not saying YouTube. I'm saying they might be, in the Western world, you see trade schools suddenly becoming cool, right? Like you go to a school where you learn only how to be a carpenter or only how to be a plumber. It could be that.
Yeah.
But
the point is,
the generalized education of an MBA, I don't think will have the value that it had yesterday.
see, most of these arguments apply to certain, let's say, poorly designed programs. I agree. But academic rigor, scientific rigor, objectivity, physical training, etc. matter. And it will for a long time.
I'm not denying that.
I think there might be quite a few AMAs between now and when the world changes, Nikhil. But I wanted to check with you what you have learned over the last year of podcasting and interviewing some amazing minds. What have you learned?
You learn about a new industry every month, which I find very valuable. It's like forced college. Like say I'm interviewing some hospital owners. I'll have to spend a certain amount of time learning everything about the business of running a hospital, the trends, how it's changing, probably hypothesize how it will evolve in the next 5 or 10 years. For somebody who didn't go to formal education after 15, this is like artificially orchestrating education, where you're forced to learn. I think that's appealing.
But is there any insight that you want to share with us of all the industries that you've reviewed? Any particular ones that stand out as good for investing?
YouTube thumbnails affect the number of views. Or so they say.
When I was younger, I always thought that there are normal people and there are geniuses, right? Like I thought about K before I spent as much time with him. But with time, with access, with proximity, like I spent some time in some AI companies in the valley and stuff like that. I feel like the one learning I've come to realize is those geniuses are not so different. The dialect they're communicating in is a dialect which is different than yours. So they sound alien when they are doing what they're doing. But I feel like the bridge between how hard it was to learn that dialect yesterday to tomorrow is becoming shorter. And I think AI has done that. So for all the people who ask me, or, I'm sure they ask all of these guys, will you be my mentor and this and that and the other? I feel like that's a terrible idea. You should never know your mentor, because it's okay to, it's like also like if I were to start a religion, I would have to find a spearhead who's already dead and he can't meet people again. I think your mentor should be like that. Because when you get too close to them, you see their flaws more than you see the genius.
Never meet
But
your
society
heroes.
doesn't operate that way, right? I mean, there's a lot of hero worshipping which doesn't let people cut across and see the negative.
Yeah, but she asked like, what did I learn? So I said, from looking at the other side, I think the hero worship and the genius worship or the mentor worship is a flawed premise to begin with.
Firstly, a lot of people pretend to be geniuses, especially in the business world. And largely, there's a big business lens here. But genius is a legit thing. Einstein was a genius, Ramanujan was a genius. Do geniuses in one area have the geniusness in all areas? No. That's a big logical fallacy. Somebody is an expert at math. You assume that they have expert views on geopolitics, gender norms, etc. They don't. That is the one big fallacy that all of us fall for, just because they're an expert at something. But some people are extraordinarily genius. Their brains are wired in a different way. But many geniuses are not really on Twitter or YouTube or are even known. And we must not apply the techno business entrepreneurial world looking for geniuses. So
I have a question
it's
here.
not a generalized thing.
One AMA question. Why is Kailash not on Twitter?
I think social media is repulsive.
Okay, sorry. That was meant to be funny, but it didn't quite land. It was like one genius not being on Twitter.
No, I have a Twitter account which I registered in 2008 or whatever, because when it came out, I don't know, for some reason, I figured way back that it's not right. Human beings are not meant to communicate with tens of millions of other people or taking non-stop communication from tens of other millions of people. And see where it has led us. Social media destroys democracies.
You have a question, Nikhil, for your guests, or at least one of the interviews that I saw. Money, power, or social media fame? Having now done this and being in the social media fame sort of game, which one would you pick?
Money first.
Does money lead to happiness? I can ask all of you.
Money, what is happiness? You can't ask me a question without defining the goal.
How do you define happiness?
I think happiness is a very relative thing. It's moving. I'm happy if the next minute is better than this minute. So if I'm very sick right now and tomorrow I'm not sick, I'm happy.
Nithin, are you happy?
Yeah, I am. But money is a prerequisite, I think. So but beyond a point, money doesn't really increase the happiness as such. Yeah.
Do you have any views?
I mean, money is an enabler, so it enables you to do many things, and I think happiness is a function of that.
The reason I'm asking is because a lot of youth look up to all of you and kind of say, and I've had friends of mine say this to me, oh, you work with Nithin, you work with Nikhil. I mean, it's like we want to be like them.
Are
we
you
want
happy?
To be, so am I happy? Oh, I'm very happy. But I went through a phase of being depressed also, where I quit my job, midlife crisis. That was 14 years ago. And I've still not got back to a job because I don't think I'm employable anymore. So there are days that but I did a lot of research on what is happiness. And the conclusion I came to was this: 3 things. One is good health, which a lot of people take for granted. Second is deep relationships. And Warren Buffett said something to that effect about people who you want to love you back. Could be friends, could be family, could be whatever. And the third is meaningful work. What is meaningful to you? And me working with Rain Matter is to me that meaningful work that I'm doing, which is what is giving me the happiness. Most people I know have 2 out of the 3, and they're working on the third one.
I think these are like deceptions you sell yourself, right? If you think about anything long enough, it'll seem meaningless and you have to find your deceptions, and these might be his deceptions, which you have adopted.
I agree.
I agree with him.
I agree.
And I agree with him exceptionally rarely.
I agree. I also agree in that in anything, I mean, what I'm defining meaning to is actually meaningless. In the end, I'm not moving the needle at all. But to the extent I've defined it. In fact, there's a guy you should interview, or if you haven't met him, Nabal Ravikant. Have you come across him? Somebody asked him this question. It was like the absence of desire is happiness to him.
That's Buddhism.
As in, what do you wake up to if you find, I know in the long run, K says everything is absurd and meaningless. You have to have something that you look forward to when you wake.
I think your question is wrong. It's not money, power or happiness. I think it's money, power or high.
That was your question. I was repeating it to you. You put it to someone.
Okay, then my question was wrong because all of us get high from different things. K's high is different than my high. Nithin's high is somewhere confused between ours. I think Karthik and Venu have their own highs.
For me, it's being rich and being anonymous. I think that's the sweet spot.
Very hard to do. If you're rich, you will turn up on somebody's list. Unless you're a politician.
I mean, you shouldn't be coming on the podcast.
I feel like back in the day, when evolution began, if you were a group of hunters, if you were the alpha hunter, and you were strongest and bravest and all of that, you got the adoration of the community around you. You had 5 wives, you had 10 chelas, for the lack of a better word. That was the hunter's high. That high and definition of high, I don't think has changed. It continues in different forms. I think for K, his high comes from a moralistic lens, more so than others. For me, it comes from maybe a capitalistic lens. For Nithin, maybe it comes from an idealistic lens. But that lens is defined by our circumstance, situation, and upbringing and evolution. And it's different for each of us. And hence, I think when Venu says rich and anonymous, it's by virtue of what he's surrounded by.
Ask about private investing. You've done a bit. Rainmatter, Grohas, WTF. Any learnings there? Any lessons there?
You have to play the game you're playing. I'm saying that under the current context of you can't be playing football with the goalpost of cricket. If you're investing, if you're trading, it's a game. The person who delivers the highest return wins. And that has to be the goalpost if that is the game. I said it under the current context because I know a bunch of people here have different ideas about this.
No, but it's probably true when you're doing later stage investments, like Nikhil's doing, because you're going in saying the company is already this big, this will go from this to a point whatever, and then you make returns on that. But early stage, I think it's all about it's how do you get the good deal flow, right? As in it's all about how do you ensure the deal flow comes to you. And at Rainmatter, we've done that. We've taken, be it health, be it climate, be it finance, be it storytelling, and I think we've kind of been like a thought leader of sorts, and ensuring that the good deals come to you, and returns are absolutely, as in what Nikhil said is true, but you can't make returns as the topmost priority, right? As in it needs to be about how do you get the good deal flow. Returns will eventually come if you manage to get the good deal flow, because if you don't get the good deal flows and then you're chasing returns, it won't happen. Like it's the same. But at the end of the day, at the end of the returns matter, because returns matter not just for wherever you're investing from. Returns matter even for the startup, because how do you know the startup has created impact or its scale? Is basically ensuring, basically if a startup does well over a period of time, they've also given returns to the investors.
The founders coming to you as in deal flow, that is happening. But is that necessarily a success? Because the founders might be coming to you simply because they know that Rain Matter is a good partner to have because they don't give us a hard time. They give us good valuation. So I'm just saying, when you say a good deals come to you, how define good? And do you have the track record? Rain Matter has been going on for 9 odd years now.
Yeah.
What's your return track record on Rain Matter?
We don't look at any return, any mark to market as such. But assuming the first few investments were companies like Digio, Small Case, etc. And if you look at those investments, I mean, I think they've done well. We don't measure any mark to market, because if you start measuring that, then you'll be forced to, everyone in the organization then gets forced to optimize for that. So.
But at some point, as you said, returns matter. So what is that point? How many years from now?
No, like I said, the business takes, I think in India, the business takes at least between 12 to 15 years to build. So it's around that time, I think, I don't know, we were hoping that some companies will IPO or something, so, and give us return. And one of the things though is like, coming to the earlier point also, like a lot of founders, when they reach out, they expect, like, I have an expert opinion on everything. Like, I might be an expert in the field of broking, and I might have a point of view on everything around broking, but I have no knowledge outside that. Outside that, I'm just like a nobody, right? Like, when people come to me and ask me for opinion on, I'm doing a climate tech startups. How do I think about life? I say, dude, I mean, how can I tell you how you should think about life? So
We should ask them to watch YouTube videos. People on YouTube know everything. They are experts on everything. Social media. Yeah.
Other than early versus late stage, are there any other philosophical differences in the way you approach private markets?
I spend a lot more time than. I think I'm doing that almost like full time now.
What do you do at Zerodha then?
See,
If that's full time.
Manage the money. Actually, that's all I do now at Zerodha. Like, the only place where I'm involved is we try and hope to make 20-30% of our income every year from investing. Largely it used to be public, now also private. And the only thing I do is focus on that and try to get that income.
But sorry, would you also say one of the differences is that we at Rain Matter are constrained by the sector that we want to invest in, which circles around health, climate, whereas Nikhil doesn't really have.
No, but he is going later stage, right? But the thing is, the thesis is the sectors we choose, like, health, climate, etc., they will probably outperform, in the long run. In the next 10 years, probably people will be more conscious about health, more conscious about climate. I mean, right now we have started investing in, deep tech startups, because, we need to Indianize everything, there's the whole de-globalization is happening and
But would you be okay with investing into a company where you don't have any alignment whatsoever, purely from a return perspective? See, that's a difference. I'm sure Nikhil would.
No, I mean, that's why he is trading. He's trading the market. He's a investor
But
trader.
give me an example. What kind of company are you thinking?
I mean, you put money in nothing, right? I mean, there was news around it.
Cell phone company.
Cell phone company.
Nazara?
I couldn't.
I'll give you the contours of that deal. I think AI from the generative large language model lens will get democratized at some point, and the next set of adoption will happen via a new form of hardware. And I think nothing is doing a good job in terms of ideating what that new form factor is. and they might be placed well to be acquired by one of these companies when they figure out the form factor, even if they haven't figured it out yet.
That's not a good example, Venu. That's a tech company trying to innovate. But they're-
Hardware today is not something that we would do.
Hardware is a huge requirement for India.
No, I'm saying, would Nithin do it as part of the Rain Matter
Rain
ecosystem?
Matter is a something. It's a subset. It's a small subset of whatever Nikhil is doing, right? As in Nikhil is essentially he's an investor trader. He's looking at the entire universe of companies that exist, and we are because we are early stage, and because we need to ensure the deal flow comes to us. We need to select our winners, as in select the sectors that we want to operate in. And we can't be looked upon as Rain Matter does everything, because then you'll get a lot more deals, but they'll not be quality deals, So.
ITM.
And also, Rain Matter is,
OTM, ITM.
also beyond Rain Matter, you do have a personal portfolio as well, right? You might be doing other investments through that. He being your
does.
fund manager, right?
Everything he does.
Speaking of, the India consumption story is one that I see you betting on. Are there any Indian brands that you want to give a free shout out to that can become global brands tomorrow?
That we haven't invested in.
You have or have not? You would be happier, right? If there were Indian brands that become global, even if you haven't invested, you'd be happy.
That's the entire thesis. I feel like the world is getting fragmented from a geopolitical lens, and with the tariff debate where it stands today, I don't think it should be mandated by the government, but we should all pick our own country because other countries are picking their own products. And I think India has a story to sell. We are reimagining the India story from the lens of things like, it could be as simple as an avocado spread, or it could be a fan like the one which is here. So we'll build out a bunch of these companies, and we will be able to sell them with less marketing money because of YouTube.
Yeah, the future of hundreds of millions of Indians lies in avocado toasts. They can wake up, like 600 million Indians who are impoverished can wake up every morning and relish their avocado toasts.
That's the point you're not realizing, that t-shirt, that FMCG product like an avocado toast, that consumer durable company is actually what employs millions of people. It's not somebody sitting and building this genius technology product. That is the future of Indians.
I agree. Large scale entrepreneurship is critical.
Yeah, MSMEs is really, what India needs is a lot of MSMEs, So.
Not software unicorns more and more.
How do you invest, Karthik?
Passive. So my investing is in index funds, and that's about it. Nothing
Not given
fancy.
it to...
No, I'm not there yet.
You, Venu?
So I have an active SIP running, and as Nikhil said, sometimes when I feel emotionally connected with the stock, I tend to buy it, but I rarely do so.
And I think all of us have too much of stock market exposure anyways, because given that, if he's bought an index fund, that's in addition to whatever he holds as Zerodha. So that'll, I think generally, when people ask me what they should be doing, I say, whatever money, outside Zerodha, keep it in some fixed deposit or something like that, So.
But I like it. Private investing, stocks, SIP, the way it turned out. Yeah.
You also differ in the way you give money away, which you should. That's a good idea, no? Giving money away. You've signed the giving pledge, right? I want to sort of discuss a little bit about everyone's sort of thing. Maybe start with you. What is that? And
I've thought about this a fair amount. That old saying, don't give someone a fish, teach them how to fish. I feel like giving away money, I'm not saying this is the only way, or I'm not saying this is the right way, should be focused on making people entrepreneurs. I think it has the most impact then.
That's what you're doing with WTF. So what happens to the giving pledge?
No, that's, again, everything will be focused. We're doing a bunch of projects. I don't know if... So the idea is to give young people who are able, who have an idea, money to start a company and then help them grow the company and spend most giving or allocate most giving in that. Because I think that has the largest impact. And I don't think you should spray and you should do just one thing and not do anything else.
You should sign the amassing pledge. I think this word giving away is very problematic. It sounds like he said, right? It sounds like you just give money away to people or someone, and a lot of people do not, or even entities don't have the ability to handle money. Unless you have the fiscal skills, how can you even effectively utilize money for anything positive? So giving away is a weird word.
Okay, charity, philanthropy,
Charity,
whatever.
the thing is, like he said, he has a very...
Giving back.
He has
Giving
a...
back?
I don't know. I mean, I'll
Okay,
try and
pick the
explain.
term that you're happy with and tell me what is Samgata.
So, no, there's a lot of things. Like Rain Matter Foundation is a massive, it's our biggest initiative yet. And I would say maybe spending is a better word that captures spending money on causes, not giving. Of course, technically it's giving money, but it's the worldview that you have. It's not you just giving away money to, random things or blindly throwing money at a cause. Samir at Rain Matter Foundation likes to say investing in the future. So even this whole giving thing, you have to do it rationally and carefully. It has to be investing in the future. Nikhil has a very entrepreneurial lens. So for him, it's all about business, markets, entrepreneurs. Fair, that's his view. But a society is not just entrepreneurship. Knowledge, commons, society, societal well-being, welfare, happiness, all of these things exist, environment. So you spend money or you invest money in those things, and the return is impact or collective well-being, not financial returns. So I think not spending, investing is the right word. And Rain Matter Foundation invests money for collective societal and environmental well-being, for instance, right? And it's not some charity that we do. That word charity never ever comes up. Like, that doesn't exist in our lingo. So just like you invest in entrepreneurial ventures because societal economic progress depends on that, you also have to invest on the other side, which I would say is in fact even more important, the social and environmental and the collective well-being of everything. So that's the way I see it. I think that's the way all of us here generally see it. So that's what we're doing. I mean, personally, I don't really have an idea of a future or, anybody or anything to pass on to.
Like us.
So,
We're the childless couch.
However, there are many causes that I care about, and very few personal desires. So it's not like giving away, it's investing in spending. He invests in markets, I invest in, causes that I think are societally beneficial. So it's a mental model.
I was curious about what you do outside of the Rain Matter Foundation.
So I've been involved in tons of projects, social projects for a very long time, from my teenage. And earlier, and even today, I volunteer significant amounts of personal time to causes that I care about. It could be something to do with language, public commons, it could be anything, generally in the social sector. It could be digital things for social good. Earlier, I was giving time and effort. Today also, I give time and effort. But over the last few years, because of the luck and privilege of, material stuff, that also is a part of the equation. So it's across projects. And thankfully, I have lots of hobbies, lots of interest that are all tied to positive outcomes for the commons. So public commons is a big thesis. So that's the way I see it. I don't see this as, whatever we do, or I do personally, as philanthropy. These are all old school notions. I volunteer time, effort, and if I have material, I volunteer material. If tomorrow I don't have material to give, I'll spend my time and effort, which as I have always been doing. So it's the same thing.
I'm very envious of the of how eloquently K puts these across, notwithstanding his contributions to society. I think, as Nikhil said, if someone wants to tread the path of entrepreneurship, you need primary education, and something that I do personally is support this as a foundation I work with, which is based out of Lucknow. So they have a lot of these kids who cannot afford primary education, so sort of fund education for the kids there.
Yeah, so I spent time interacting with this organization called Swataha whenever possible, but they're also linked to financial literacy for rural India, women and children. So apart from that, nothing much.
Even Varsity does quite a bit now.
Yeah, we are trying to. The DNA required for spreading financial literacy in rural setup is very different from what we at Varsity do. I think for rural India, what you really need is you can't just go there, do YouTube videos or workshops and things like that and pack up. You need a longer term commitment. You need to establish support systems. That's a different DNA. So we partner with organizations like Swataha who can do this on a continuous basis and be there, be present there and do continuous follow-ups. We recently supported this organization called Mentor for Kids. What they do is they teach finance skills to, this started off in Karnataka, coastal Karnataka and northern Karnataka. What they do is teach things like bookkeeping, GST filing to the college students, youth there, with the hope that they can get absorbed by local MSMEs and provides for employment. It's a very interesting experiment. We've just supported them. So yeah. So
can I speak on Karthik's behalf? See, it's a matter of mental model. Karthik goes on wildlife photography trips. He goes on hard treks to do astrophotography. He puts in so much effort. He releases the outcomes of those things, beautiful photos. He documents them, releases them to the commons. That is also societal well-being. So, but it's a mental model. It's your hobby, but the moment you add it to the commons, it's public utility. So he does a lot of those things. It's not about giving, this is what I'm saying, this whole idea of charity, philanthropy is so flawed. It's not about giving money to a Section 8 saying you go fix this. It's not that. If you have money, you give whatever, not give, invest. But it's not about that. Philanthropy as a word has been hijacked by big businesses to set up their, family foundations and their names to, continue their legacy. But the original meaning of philanthropy is loosely in the interest of humanity. So you do a lot more. Don't sell yourself short.
What would your legacy be? First, maybe just talk about Rain Matter first, both foundation and the corporate VC, and then maybe broader.
See, the idea with Rain Matter, I mean, it's not really corporate VC as such, but essentially 10% of our profits we've decided to allocate to entrepreneurs, and 10% of all the profits we generate, we decided to, through the foundation, give to the social sector. So
how much have we given away? How much have we invested?
Yeah, invested.
In the future of society.
Yeah. So at the Rain Matter Capital, the entity, we have done 1,300 crores across 140 startups, around 130 to 140 startups. And for the foundation, we've done 500 crores almost, and we've allocated 500 crores. We have dispersed, I think, close to 400 crores. And yeah, I mean, still, I guess a long way to go. But again, with the foundation, the thing was, it isn't, even if you want to invest money, it's very hard. It's very hard. You don't really have people who are capable enough to handle large amounts of money to So they need to develop too. Like it's like giving money to a startup, right? Like when you give too much money to a startup who doesn't have the capability, they'll just go burn it or blow it away. So essentially, we've started small there. I mean, small in the sense, in the overall context, it's small, but 500 crores. In terms of my legacy, I don't know. I mean, I don't care about any legacy, and I don't wish to leave behind something that people, say that because Nithin was there, this exists, or I mean, it doesn't really matter, So that's why maybe all the foundation thing, it's called Rain Matter Foundation, because I don't see a point of associating a Zerodha name or a Nithin Kamath name to anything at all.
Yeah, in fact, none of the social projects have any personal names. But just adding to what Nithin said, we've realized that it's far easier to invest in startups than in social sector orgs. The amount of time you have to spend with an org to understand them, the amount of rigor and effort you have to filtering orgs, understanding people, understanding their capabilities is far higher and more taxing than a startup, because a lot of tangible stuff here. You look at P&L, projections, etc. It's very difficult to invest in social sector orgs. Much more rigorous, much more painful, lot more personal effort in understanding the people who run those things, understanding the ground impact and effects.
I kind of regret the fact that I don't give enough time for that, because to the foundation, I need to be giving more time, and I need to be involved a lot more than what I am, and I'm conscious about that. But I think Kian is in 5th standard, maybe around 10th, 11th, probably another 5 years he will become independent, and then I probably can give more time.
But why do you have to give your time? I mean, surely you can delegate some of this.
Like what Kay said, I think it's you can't really delegate these things. It has to be.
That's the whole consultant thing. Then why do you have to have skills? You can always delegate. If everybody is always delegating, what differentiates a Zerodha from another broker? What differentiates us is the time, expertise, experience, insights, and skills that have come together. Cannot be delegated. Yes, operations can be delegated, which we do, of course.
Before we start closing, we talked about what has changed in the last 12 months. Can you give us an update on what is happening in the next 12 months?
In terms of changing, as in terms of products, as in we're doing a bunch of new things. As in, I know that a lot of people tagged me also on Twitter and asked about the US investing thing. That's something that we are working on, and we should have something maybe in the next quarter. So maybe you can.
Yeah, I was going to say, is that a product thing or?
Yeah.
Okay.
This has been a long pending thing, investing in foreign stocks. We have the requisite regulatory clarity now via Gift City. So we're trying to build a super simple, seamless experience, back-end and front-end. When it comes to tech and products, there's a whole series of things that are being worked on. There's a big update to the desktop trading experience that's coming, something that we were planning last year. An independent, standalone, slow personal finance and wealth management thing is coming on Coin. And there's a massive series of big updates infrastructurally also happening. So we have doing some radical tech changes, upgrades in the backend that will help us scale for the next decade, whatever comes our way. So the next several months, we're going to see big user-facing feature releases, product releases, and also big changes in the backend.
The two big things I picked up there, one is investing overseas. Is it just US or globally?
US for now, yeah.
Okay. And two, last time we talked about fast versus slow investing. So you're saying Coin will become the slow investing app?
Yeah, that was always the plan for Coin. Again, there was regulatory clarity that was missing, but we finally have it. Now it's entered the product phase. And on the primary trading and investing experience across all apps, there are big upgrades coming.
And another key development that has happened on the product front is today we have the ability to allow clients to place orders via WhatsApp. So this is a disaster recovery in a situation when the main trading platform is not available. We're hosting and allowing people to place orders through WhatsApp. It's going to be restricted to exiting your current positions, but it's a fail-safe mechanism that exists when kite goes down. So that's also, I'm assuming,
So that
an important
required
development.
Yep, that required a completely different setup, completely different infrastructure parallel. It's not just a WhatsApp interface on top of all other systems, different cloud provider, different data center, the whole thing. So this was added just as a value add in case of a disaster. Yeah, the whole series. Yeah.
And I guess we covered margin funding at the start, I guess, right? So that's book. I mean, that's something that we started last year. That's grown to 4,500 crores, you know. So, and what else is a product?
Advanced order types, synthetic orders.
And then mutual funds on kite.
Mutual funds on kite. That's a usability improvement, but advanced products for investors and traders. You know, things like trailing, stop loss. I can't believe I am saying these financial things. You should be saying you understand them better, but we are building all of them in the pipeline.
And there was one discussion in between. You had a post about the young or new users not coming as much to Zerodha, and you said any suggestions of people sort of writing in. I wrote in some suggestions, to which you said there's no way that will happen. And that was, I think, just more, can you cater to novices and to professional traders in the same app? And it's not possible, right? So you're still chosen professional traders.
No, not professional. I mean, see, the thing is, while the trading community adds a revenue, we have 6.5 lakh crore of AUM. It's coming from, not professional traders for sure. But the same app doing both the things, I mean, it's very complicated,
So just to clarify, you're talking about two different experiences being selectable on the same app. That's not. That's what you're
Yeah, I
referring,
think it's more that there seems to be a consistent sort of feedback on Zerodha posts about the user UI, UX being difficult. That was my experience, I think I shared. So I was asking whether it's possible to have a simpler interface, to which I think you said last year, Coin is that.
No, Coin is specifically for a different investing experience. The Zerodha, let's say Kite, our primary investment and trading platform, it has the simplest possible UX if you are a DIY person. Doesn't matter if you're 18 years old, but if you want to buy Infosys, you can come buy Infosys within seconds. No push, no nudges, no nothing, no spam to get through, no confusing UX. That is not what generally people refer to as simplicity. Novices need some hand holding. They don't know that they want to buy a certain stock on day one. That is the UX bit, but that also we are working on. So our UX and UI is designed in such a way that you can start out as a young trader and you only need to do what you have to do. But as you mature, the more advanced features are discoverable. That's not possible when you have a novice mode and an expert mode, because that transition is very organic. A novice doesn't suddenly become an expert. The usage of advanced features slowly creeps in. So all our UX and UI is designed for that. That's why we have people who are 18 years old and 90 years old actively using the app, and they're happy. But there's one thing about a guided path for novices who don't know what they want to do on day one. That's coming.
Yeah, it's basically like a market dashboard. So you don't land onto the market watch directly. You land to a dashboard which gives you an overall summary of the market. And from there you navigate to wherever you want. I mean, that's something that's coming. And some of the suggestions you had in terms of, a certain type of order, etc. It's some of it is legacy issues, and most of the things which is kind of an oversight or something we've already incorporated.
Yeah, I felt pretty stupid. I'm a CFA and yet I didn't know what the abbreviation stood for. It's like, what is GTT? I don't know. I had to ask people actually. Anyway, doesn't matter. In the end, there are enough investors in Zerodha, so I must be the. Anyway, when you travel together, who is the first one to get up in the morning?
I can tell you who's not the first one. Karthik.
It's always Nithin who wakes up first.
And works out.
How do you decide where to travel?
Kids decide.
When is the next boys' trip happening?
Soon, hopefully.
Okay. What is the first app you open first thing in the morning?
No. The Twitter.
You open Twitter as well?
And it depends what time of the season. If it's cricket season, then it's cricket info.
Nikhil?
Whoop.
What is
Sleep,
that?
whoop, sleep quality, recovery percentage.
Do you sleep well?
No,
Why not?
I don't know why.
What is the one trader you admire? Who is the one trader, I should say?
Tough, actually.
It's Nithin.
That's a quick
but he won't
question.
say it.
Okay.
Yeah, but you didn't answer the first app that you open in the morning.
Email. It's been email for decades.
Oh yeah, actually mine also email.
Yeah.
Yeah.
Matter most.
The first thing I open is email.
Will email be dead in 10 years' time?
Never.
No?
Email is one of the fundamental backbones of the internet. The way people use email is changing, but we're all dependent on WhatsApp, but WhatsApp is one company. It can go dark at any moment. Email is a decentralized thing. It'll exist for as long as the internet exists.
Thank you for all of these people to turn up, actually, but thank you for humoring me, and thank you very much for watching.